Umbrin Capital back with a brief trade update. Um, Notice a bit of selling action on the Bitcoin market. We're going to go back to the decider of the direction of all crypto. I don't mind this at all. People are calling Bart on this. I don't think so. I think first and foremost, observe the downside volume in this structure. It's all green. The net position is growing. Look at this. This is a fractal from the 1 hour time frame, incorporating this volume here. You have this structure. You know, Barts don't have to be dumped all the way back down to entry. That would be too easy. A Bart is all a Bart is a markup, a distribution, and a markdown that goes basically back to where they started. It's more common in the lower time frame because it's easier to do it in the lower time frame. But just because this looks like something that played out in the 1 second time frame or the 1 minute time frame that went all the way back down to the entry and beyond doesn't mean that that's going to happen. This is a consolidation. This is a markup and a consolidation. And you've got upward sloping volatility, catching price on the daily time frame. You also have the daily short-term mean catching price. This does not necessarily have to be bearish. This could be the initial tester of liquidity. But in any event, trade idea based on that thesis. There's no point saying this could be, back it up. So we're looking at this structure. Continuation is the bias. So let's look for evidence of the market maker thinking the same thing. And we have this volume spike coming in at this. If you imagine this is basically what we're looking at here as a lower fractal, you can see that this volume structure accumulation with volume to confirm. It's not just that looks like a pattern. It's with volume to confirm. Look at that green, 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 green. It doesn't look like it. The reason I turn off the color is because this is bias. I don't give a shit if the open closed above or below, if the candle closed above or below the open. I don't care. That's irrelevant. That's really basic stuff. Turn it off. Don't care. I do have them color coded just so I can tell the difference generally. But these only gain. My candles only earn the right to show color when they prove to me that they mean something. And these candles that are colored, they mean something. And in my volume, I have the only thing that matters is the volume within that candle. And was there more buying than selling based on proprietary formula? It will show up as green, and the net amount will show up, and it will be added to this on a constant rolling basis. This oscillator is just each candle. It decides was this selling or was this buying, and it takes it away or adds it to the total. So you see all of this green is represented in this net position growing. So what does that mean? That means we had this volume coming in, had a stop hunt of the key volume area. Key volume area, I use the phrase a lot. Key volume area is the biggest point where the spike was. But the mistake you make is thinking that's the low. And the reason it often isn't the low is because too many people think it is. And when too many people think something is something, it's incumbent upon those with the power to prove people wrong to show them that it is not. So this is the low. 100 million stop losses go at that point. And, as if by like a law of nature, but obviously it isn't. It's just liquidity hunting because it's an obvious thing to do. The price goes below there and cleans these people out. And these are often the best entries. As you can see in this setup here, it was the best entry. Not claiming I took it, taking the trade here though on further information. Everything needs to tell a story and go with one another. You got this period of sideways volume when nothing really happened. And what the story that's telling is nothing happened here when price was moving down. There was no key volume activity represented in this down move. Therefore, we disregard the down move completely. It's as if it never even happened. We can take the little bit of volume that they were able to buy at this low to support our kind of a 3 push into a low story that we like to look for. But this, meaningless. people rightly long here on this stop hunt might have gotten afraid that their profits were being taken away from this entry and close. But volume is so important. Net position was unchanged, and it changed to the upside here. There was more inventory brought on here. What happened in this area? You had an initial move. Stamped down. People think, oh, that's bearish. Oh, all the selling volume came in. And yeah, granted it did. This was a net selling volume candle, which means that it caused the net balance to go down. But you can't just say that's bearish and disregard all of this. It's a story that's being told. And then you get this move above, engulfing. People overuse engulfing candles, candlestick patterns. It's like, yeah, all of this can be used when it's relevant. I'm not just looking for engulfing candles always. I'm looking for an engulfing candle in a situation like this, because what it proves is selling here, price goes above this area. It means that all the selling that happened here, price was still able to reclaim this area. And then what happens? In this engulfing level, you have two downside wicks, and the amount of volume that came in on the two of them, on these three candles, both the engulfing, it's very rare to get a what people would call a bullish candle, a green candle, or a bearish candle, a red candle, that also matches my volume apportionment because of where the wicks usually come. On a bullish candle, you usually get selling at the top, which actually turns it into a net selling candle like here. It's very rare to get net buying on an up candle and net selling on a down candle. They're very much indicative of trend moves coming. So we had this big volume on this engulfing candle, and then we had these big wicks into that area, into this area where the initial selling came, because they know there's retail liquidity because they're able to dump it on them before, so they can actually turn the market on them and do it the same but inverted on the other way. The volume came in, huge volume, and then that is basically conditions being met for a trade. And for targets, obviously the liquidity is here for the initial move if you're a day trader, which we are not. If you were a day, doesn't mean we can't use day trade concepts and trade the lower time frames to get a good entry, but we're not day traders. If you were a day trader, that would be your liquidity. They're obviously going to run for the liquidity up here on the basis of this price action and the volume supporting it. Does it mean they can they go lower? Yeah, they could in the context of a wider structure, but when viewed in light of the higher time frames, how price is getting caught by this volatility data set, it's very likely that price retesting the liquidity at the top of this range, like I pointed out, is going to be the cap of the data set. Here, likely price will teleport kind of to the top of the range, consolidate on the upside of the mean, and then continue. And that's how a BART resolves to the upside. They're not always downside patterns. So just to show kind of how a volatility squeeze happens, you have the short-term data set blue, medium-term data set in orange, and then the longer of my shorter-term data set. So there's two longer-term data sets, but the shorter of the longer terms, you have this squeeze where price kind of gets squeezed between them, and because of all the algorithms trading Bitcoin price, it approximates basically multiple triggers, and you often see price getting squeezed. So that is to say, that is the basis for a trade entry. It has to tell a logical story, and it has to be consistent with a system that you've back tested and know that works. But that is essentially how a trade would be looked at on this time frame, how multiple time frames, time scale, and how multiple time frames would indicate, a likely story that's being told. So that is how you get in. That is how you enter in an accumulation or in a reaccumulation. That's how you get a good low entry without kind of waiting for confirmation of a breakout on the higher time frame and having to have your stop loss like way below that low. You kind of theorize what something might do, and then you look for confirming evidence like volume and price action. Like, why is the market maker coming in here? Like, what is the logical story that's telling? Like, why would I go out to a shop and buy something I don't need? I wouldn't. You wouldn't. Why would you? You wouldn't, though. So the market maker is not going to buy Bitcoin that he doesn't need, unless it's kind of on a higher time frame and he's trying to artificially support the market. But this is not the higher time frame. These are day-to-day operations. Why is this occurring? Like he on the hour time frame, he's probably holding for a couple of weeks, couple of weeks, maybe even less. Like, so why is he buying this? Why is he coming in and buying Bitcoin with his money? You wouldn't go to the shop and buy something that you didn't want or need, because he thinks it's going higher, because he knows it's going higher, because he will make it go higher. And that's the way that OnBring Capital looks at the market on the shorter time frame to insert entries to profit from a longer term bias. So we're on the 4 hour with our kind of larger structure, if you can even call it that, on that lower time frame. But it's still the monthly thesis. Like, it's the monthly thesis of the Nasdaq retest, that's playing into this nice structure and this kind of outward trending move on the weekly with a target of the exact same point. And then the daily time frame, you have this kind of into the short term mean, and on the 4 hour time frame, you have this accumulation with volume, and then on the 1 hour time frame, you have this micro structure to get your entry to profit from this move. And that's macro to micro trading. Big time frame to low time frame for the bias, low time frame up for the entry. And that's how you get in to take advantage of these moves. And because the risk rewards are higher, you can kind of take a couple of entries if you need. But if my edge is what I think it is, then this is what I think it is. So we'll see how it plays out, but there's no need to self-aggrandize and stay with the video on for 4 hours to see how this resolves. You all check the charts yourself and we can see. But whether it plays out or not, if the market maker if he decides, yeah, that's a good place to get a position, but OnBring Capital and people like him, because there are levels to this. There's levels to stops that they will go after. So I'd say a lot of people are doing the same analysis, me not making content for the internet, but with in implied stop loss. No actual stop loss in play. That's not in the crypto markets, because you're asking to just be taken. It would be a structural stop loss, more that, like, if price began to do something, I would just be like, okay, it's not working. It's not like, oh, price below that, unless I'm going away or something for a while, I'm not going to be checking. But if I'm going to be monitoring the market, I don't need a stop loss, because if price does something I don't want it to do, then I'll sell my position. But the point I'm trying to make is, yeah, well, the logic is clearly true, what I've said here. There is actually nothing precluding this and then this. So that's why you can sometimes need a couple of bites at the cherry, but that's the game, and it's been managing your risk and having enough ammo to play the game for even when you're wrong. OnBring Capital, hope you enjoyed. Thanks for watching.